Hi, I'm Peter Rose, founder of Longwood Currency Trading. Your trade entry decision is the most important that you can make. There's a lot of argument on the other side of that your exit is more critical or your position management is more critical. But look, if you don't get the trade entry right, you're not going to have a position to manage and you got nothing to get out of. So I don't know where all this stuff is coming from. I'm getting a couple of questions in emails. Thank you guys for sending me emails. I enjoy communicating with you. But I disagree with all those that are saying that trade entry is easy. Anybody can enter a trade. You just put it on there and then it's a random situation and you go probability and your win-to-loss ratio takes care of the rest. Well, you don't have a very good win-to-loss ratio if that's the way that you think. When you're consuming information on Forex trading, you have to remember that a lot of the folks that are providing that information really are not educators. They may be pretty good traders, but they're not necessarily good educators. So it's very difficult for them to convey to you exactly what it is that's enabling them the success that they have. You can find a wealth of people that have 80% what they call win rates. I think that's limiting in describing what their particular situation is, but nonetheless, 90% of their trades or 80% of their trades are winning trades. The only way you can get an 80% winning rate is going to be if you let that trade run against you. And you have to be pretty skillful not to get into too many trades where the trade runs against you. I know folks that do that and the trade always runs against them, but it doesn't run against them to the point where it hits like a panic stop. And most of them put that panic stop at 20 or 30 pips out. Well, if you get hit with a panic stop 3 times in a row, you're basically done for the day. I mean, that's a lot of heat to take. So you don't want that panic stop to get hit. It's only there if something crazy happens. The person who can look at the chart and say, gee, this will go in my favor, or maybe it won't go in my favor, but it won't go so much in my favor that it isn't going to flip around in a reasonable period of time and then go on to that projected winning target. Let's say you're looking at a long trade. And then they'll go on talking about Fibonacci's and Bollinger Bands and all the rest of the crap that they're using for confluence. Well, confluence has to be based on something. You can't say, oh, I've got this moving average and I've got an RSI and the RSI is confluence on the moving average. Well, that's just absurd. It's just absurd. Why not just use the moving average? Why not just use the RSI? Well, first of all, they don't work for the purposes that you're trying to use them for in entry theory. So where's the real base that the confluence of anything is predicated upon? If you didn't have some base to that, why would you be looking at, well, what is the Bollinger Band going to tell me? Or what is this happening? Or what is that? There has to be something behind that. And that something is their experience in trading and dealing with price action and understanding that when they look at the chart, they're not looking at the current price action. They're looking at that chart and their time frame that they're on. You can't spin between, oh, I'm going to look at a 4-hour time frame, I'm going to look at a 1-minute time frame, and then I'm going to switch out to a 15-minute. Oh, and then I'm going to look at AUD and ZD, and then I'm going to look at USD, JPY. It just, you're all over the place. Particularly if you have under 400 or 500 trades under your belt, trading multiple time frames and multiple financial vehicles, let alone multiple currency pairs. Where is your experience going to come from? You're going to jump in a Kia one day, you're going to jump in a tractor trailer the next day, you're going to drive a bulldozer the next day, you're going to drive a city bus the next day. Do you really know how to drive, and are you driving any one of those efficiently? Well, you're not. So where does the basis for your trade entry come from? It comes from your knowledge of trading and what price action does based on what it's been doing. That's where you get your probabilistic view. But if you're not an educator, you don't know how to break that down to explain that to somebody. So those of you that are out there watching this stuff and consuming it go, oh, when the Bollinger Band is looking like this and then the RSI says that, man, boom, I'm going to go in. And then you don't find success with that, and you wonder why. So you go to the next guy, see what he has to say. There's nothing wrong with most of those guys that are out there that you're looking at, just they don't know how to present the material to you so that you can understand it. You're not trying to learn how to trade with a Bollinger Band or an RSI. You need to learn how to trade. And the focus of that trading is getting your entry correct. Because again, if your entry isn't correct, you're not going to have a position to manage. And if you don't have a position to manage, you don't have anything to get out of and exit. In those 3 steps of the life cycle of a currency position that I've defined from my 33-year career as a software engineer, taking a rip against the software development life cycle, the SDLC. I looked at the currency market and trading, and I defined it and called it the life cycle of a currency position. And it has 3 phases: entry analysis, position management, and exit methodology. Couldn't be any fucking simpler than that. And that's why I can say with all authority that if you don't get your entry correct, you're screwed. And the basis of that is, if you don't understand trading, and if you don't understand order flow in particular as it relates to the currency market, you're not going to have a good entry. If you're sporadically losing and winning and doing this and trying that, you're not going to have the success that you deserve to have for the amount of work that you're putting into your trading. There are many different paths to success in your currency trading. And there are many different ways that you can enter the trade, that you can do the analysis to enter the trade. But there's only one way to trade. So if you learn how to trade, then you can pick out the different paths. If you're driving your car, go to the next town, you're out in the country and you have 2 little towns that you're trying to drive between, this massive back roads. There's a bunch of back roads that you can get from where you are to where you want to go. So you know how to drive. So you're driving along this one particular road and you see that it's washed out, or it's got, well, why go that way? So you pick a different path and you go that way. But the first thing you have to understand is how to drive the car to get between the 2 towns that you're trying to get to. And then you figure out which path is going to be good for you. That's the process of learning how to trade. I don't know why people don't focus more on that. It's probably the reason that not many people watch my videos, because I'm talking about the big picture of trading and everybody else is looking for the secret sauce recipe for the Bollinger Band cross this RSI configuration so that they can enter their trade and make $1,000 on their $100 account. Well, that's okay. If there's 20 people that watch my video, that's 20 people that I can influence, and maybe you will then look at your trading differently and learn how to trade before you start going, oh, Forex doesn't work, I'll go to crypto, or I got wiped out of crypto, so I'm going to come to Forex, or I'm going to trade penny stocks because there are guys out there that make millions of dollars penny stocking. There's guys who made millions of dollars trading real estate, running car lots, restaurants. What's the market? Where are your skills at? Didn't anybody ever sit down with you and say, hey, talk to me about who you are as a person. Explain to me what your goals are. And let me help you think. Maybe it's not Forex that you want to do, or crypto. Maybe you're better off just doing your studies and becoming an architect, or becoming a maintenance specialist, HVAC specialist, and just put your money in a, like an index fund, no load index fund, and maybe over the long run you'll average about 8% a year. That's about what you can do with that. If you want to take a little bit more risk, you can try the stock market, which is 9 to 12%. You want to take more risk than that, you go into the do real estate like I did for 40 years, and you get 20%, 25%. Sometimes the return is infinite based on how much you put down and all that other kind of crap. You want to take a little bit more risk to make a little bit more money, then you start trading derivatives or Forex, or maybe you're interested in sugar or pork bellies or lumber or whatever. You can trade commodities or futures against commodities. There's all these different cool things out there, but if you don't know how to trade, you're not going to trade any of them. If you don't understand the principles of trading, how are you going to understand how to get into the trade? That's the most difficult decision that you can make. If all you know is the stuff to get you into a trade, you may very well be able to say, oh, I think in the long run, the price is going to do this. Yeah, that's the long run. But what's it going to do on the next tick? And the next tick after that? You know, regardless of how good your entry analysis is, and I go through this in my course in determining out certain characteristics of determining that macro view of price action at that particular time. But I'm very careful to say that as soon as you put your trade in, it's 50-50 jump ball as to whether that next tick is going to be up or down. And because it's a random, individual price action is random, the next tick, it's going to be 50-50 jump ball as to which direction it's going to be going. And the next tick is 50-50. It's just like flipping a coin. It's 50-50 whether it's going to come up heads or tails, no matter how many times you throw it. But there will be periods where that coin will come up tails 4 or 5 times in a row. That's why we can say with a certain amount of authority, and I did the calculations with it, that if you trade about 300 times, you have something like a 34% chance that you're going to get hit with 6 losing trades in a row. Well, you also get 6 winning trades in a row too. But you don't think about the wins, you expect the wins, but the losses hurt, and you don't understand why you lost. But I think the problem is you're looking too much at the Bollinger Bands and the moving averages and the RSIs and all the other stuff that all these guys are thinking about, instead of stepping back and looking at trading as a whole, understanding that there's a probabilistic view that you have at that entry as to whether that's going to go in your favor or not. That doesn't mean that it's going to go in your favor from the get-go and going to move toward the profit target. There's a second probabilistic calculation that you need to make, and that's how many times is it going to go the wrong way against you after that entry. And you have to combine those two probabilistic views in order to determine whether the entry, regardless if it meets all your entry criteria or not, is a valid entry because it has the higher probability that not only will it move in the long term toward wherever it is that your profit target is at, but it will move in the immediate term enough times to get far enough ahead that you can at least bring your stop to break even. Okay? That's why the entry analysis that you do is so critical. As long as you understand that the principles and the process of trading itself come first, they take precedence over whatever it is that you're trading as the background. This is the field of battle that we're on. Now, what game are we going to play on that battlefield? Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.